Hi guys, welcome to this episode of the Crypto Chiefs Crypto Trade Master Series, where we're going to be taking a look at Relative Strength Index, also known as RSI. So what is the Relative Strength Index? It's a momentum indicator and it's used in technical analysis to measure the scale of recent price changes to evaluate overbought or oversold conditions in the price. It's displayed as an oscillator, which is a line graph that moves between two extremes, and it has a reading from 0 to 100. So a coin is considered overbought when the RSI reading is above 70, and a coin is considered oversold when the RSI is below 30. So a lot of people use the RSI as a trading signal for buy and sell confirmations. So the idea behind it is that you can open a long position or close a short position when the RSI crosses from below 30 to above 30. So as the RSI starts to move up from an overbought position, you can open a long position or close a short. And in the opposite to that, you can open a short position or close a long position when the RSI crosses from above 70, so from an overbought area to below 70. So to show you an example of this, we can see here that we was overbought here. So just to explain to you quickly, this is the scale here, 0 to 100. We can see here on the right hand side. The top dashed line shows the 70 level, and the bottom one is the 30 level. So we've come from above the 70 level here, so from overbought, and we've crossed back down into the normal sort of below RSI 70, and we can see that the price then started to move down. So that would have been an indication as we crossed down, potentially either to open a short position or close your long position on this trade. And looking at the other way, we can see we've come from here, we've come from an oversold area and started moving back up, and the price as well trended up from that point as well. So this would have been an indication here to close a short position or open a long position. As well as the overbought and oversold areas, RSI 50, which is a midpoint, is also something to take notice of as well. So this can give us a good indication of the overall sentiment of the market. So if most of the RSI action is above the RSI 50, then that's considered bullish, and if most of it's below the RSI 50, it's considered bearish. So what I've done here is I've marked the midpoint, the 50 level, in green, so to give you an idea. And you can see here most of the action is below the RSI 50, and in that time the price was trending downwards. So this was a bearish period for Bitcoin here. We had a few moves above obviously, but generally most of it was below. And the opposite of that here, most of it you can see is above the RSI 50 level. Again, a few moves below, but generally above the RSI 50. And in that time, the price was trending upwards. Now, the most powerful tool, in my opinion, the most powerful way to use this tool is RSI Divergence. And actually, the guy who created this indicator said that this is the best way to use it as well. So RSI Divergence occurs when the Relative Strength Index indicator starts reversing before the price does. So this can often be used to determine a change in the market before it happens, sort of to almost predict what's going to happen. So bearish divergence is when you have an overbought reading, so above 70, you then have a lower high on the RSI and it starts to trend down whilst the price is trending up. So the RSI is trending down, the price is trending up, and that signals that a potential downtrend is coming for the price as well. And the opposite of that, bullish divergence, consists of an oversold condition on the RSI, so below 30. Then the RSI starts to trend up whilst the price is trending down. That signals that the price could potentially soon reverse and start to move back up. It sounds confusing, but we'll take a look at a couple of examples now. So here we can see on the Bitcoin chart, The price generally here is moving down. It's trended downwards here, but during that period we've come from an oversold area here and it started to trend up. So as these higher lows were happening, it's sort of an indication that perhaps a reversal is coming, and we saw here we did get that breakout. The price completely reversed and the bullish divergence played out, and the opposite of that, bearish divergence. So we can see here the price was trending upwards during this period. At the same time, the RSI was trending downwards. So we've come from a really overbought area here. We've had a lower high and we've continued to move down. And we can see that eventually the price followed. That moved down too. So this was a good indication in this area. We could sort of start to tell that there was some bearish divergence and a move down was likely to follow. So the way I would do it, if you don't already use RSI, it is available on almost all charting programs. On a lot of exchanges, they offer it as a tool as well. I personally use TradingView, and obviously it's on there. I don't use it as purely sort of buy and sell signals like some people do. I like to use it as a confirmation for entries, and I generally use the RSI Divergence as a signal. So if you don't use it already, it's a good idea. Just pull it up and before you enter trades, just have a look, use it as confirmation. Even practice, pulling up charts and trying to spot divergence, bullish or bearish, and see how you get on. Hope you found this useful and it gave you a bit of a better understanding of RSI. And I will see you on the next video.